Hey folks, Dan Frio here, the rate update. Today is January 20th, 2021. We had a smooth transition. I'll be honest with you, I was very surprised. But coming up, I got great news about Daca, down payment assistance, what's going on with the stock market, and what's going on with mortgage rates. It's all good. So don't go away. Be right back. Okay, so it's almost the end of the day and no turmoil at the Capitol, which was a big surprise. I kind of wasn't surprised, I guess. My anticipation was everything was going to be okay, but you never know. And it's the thought of, I don't know, is what kind of creates fear and anxiety and so forth. So got some great news in this episode, and I'll be as quick as I can. Is Daca recipients are now eligible for an FHA mortgage. So if you're out there and you want to purchase a home, just hot off the presses, I just got it. We just announced it. If you're a Daca recipient and you're like, you know what, I want to buy a house, we're here to help you. Also, more fantastic news is we have specific down payment assistance programs. We have one in particular in Illinois that just came out. We can help you with your down payment assistance, and also the package contains up to $40,000 to pay off your student loan debt. That would be forgiven after 3 years. So to find out more, if you're in Illinois, give us a call on that. We have down payment assistance programs throughout the whole country, so that's great news. And also, there is a lot of programs starting to trickle back in. I think renovation programs are coming back. So if you want to, finish your basement, do a whole bunch of renovations, which I think a lot of people are going to do. You're either going to do one of two things, and I'm doing the same thing. We're remodeling our house. I've been in my house for 19 years, and it needs some updating. So we're doing that right now. Or you're going to move. You're going to move up, or you're going to move down. I can help you in all those scenarios now. So that's great news there. Other great news is the Biden administration the rumors. I don't think it's going to be rumors much longer. They're going to come out with a $15,000 first-time home buyer program to give you $15,000 to help you with the purchase of a home. That is fantastic news, and rates went down today. So I'm pleased to say it's nothing but good news. So let's get started. Where are we at today with the markets? Why people follow me? They're like, what's going on with mortgage rates? Well, today it was a coin flip. It was like, are the rates going to skyrocket or are they going to drop? Well, as you guys know that follow my channel, up 17. What do we know when the MBS market goes up? Quiz. A, rates go up. B, rates come down. Those that picked the rates come down, you won. So as the MBS market, as you'll see, if this number is green, the bigger the green number is, the lower the rates. So 17 move is good. And let's get to the charts to see where we should be trading, where I anticipated we should be settling, and how close to those triggers are we. So those that also follow the cryptocurrencies, you're probably starting to feel or watch me and say, I get the Fibonacci levels, I get the technicals, I get the moving averages. If you're not in the cryptocurrency yet, watch my videos every morning because I go over scrub, and that means stocks, crypto, real estate, and bonds, SCRB, scrub. So what I do on here is I'm trying to trend and say, okay, based on the economic news and everything else coming out, where should mortgage rates be? And so we track the MBS market. This is one of the biggest components of the mortgage rate. And then we get into the micro pieces of the equation, what actually goes into or what affects the mortgage-backed securities market. This is a bond that trades on Wall Street that you might have in your investments. And as this number goes down, rates go up. As this number goes up, like it did today, rates come down. So what happened was, if you go back in time, and let's go back for about a year, look at this crash. And again, when this goes down, rates up. Okay, this is when everything started happening with Corona and the world was starting to end. And then all of a sudden the Fed came in and said, okay, the government and the Fed came in and said, we're going to do everything we need to do to stabilize this market. So they came in and stepped in at a perfect time. Look at this red line right here, okay? And that was basically our trading point for the longest time up until around the end of the year. All right, so now let's look at the last quarter. So the red line is right here, and that is a long term. If you were to ask me, 8 months ago where we should be at equilibrium in rates, I'd say right here, and that's where we are right now. However, if we go and review the last quarter, if you kind of break that down, you should be right in this range here. Okay, and how am I coming up with that number? Well, let's go through this. Here, let me click out of here real quick. So these lines right here, all these lines going across are Fibonacci levels. Those are support lines. Support to the upside, support to the downside. You can see we keep hitting this line up here, top line support. We hit it, we're not passing it. Okay, but the problem is I expected us to hit these other technical lines here, and I'll go over those in a second, on our way down to the floor. Well, let's go through these lines here. So we first start out at the line right, this line right here, the purple line, is a 100-day moving average. The black line is a 50-day moving average, and the maroon line or the brown line is a 25-day moving average. You can see the 25 and the 50-day average really crossed right in here. So theoretically, we should be probably trading right about here, okay? So my anticipation is, but there's a lot of economic news coming out the rest of the week, is that we're going to continue a climb up. And again, as we move up, rates are coming down. So I responded to a lot of people on YouTube in the last couple of days. They're like, Dan, my lender is telling me I should lock for 60, 90 days, and there's a cost, and then this and that and this and whatever else. Why aren't you using me? It's what I do for a living. I'm here to help you guys with your mortgage. The reason why I'm training you on this is to show you what I do all day long. I'm working for you guys. I'm making sure that you don't lock in at a bad time. I'm making sure you get into the right program. I'm making sure, all these things. There's no benefit to me to take you down a bad road, because, a good portion of our business comes from the YouTube audience and the YouTube channel. So the better I do for you, the more comments and the more thumbs up you're going to give me, and the more people that are going to watch and the more clients that we're going to have. So it's a snowball effect. If I do a bad job or a terrible job for you, or my rates are stink or anything else, I'm going to get these, and business is going to slow. So I have no intention of putting you in a bad situation. So I do this every day, all day, to help you guys. And I'm not locking people. I haven't locked people this week. I'm not looking to lock people, because this trend now, look at this trend. It's a fantastic trend. So that's what we're watching. My expectations is us to be up in this area here. So let's go on to the economic calendar and see, is there any other news coming out this week that should or could make some moves in the market? Well, let's go through with this. The ECB, the European Central Bank's rate decision, nothing going to be there. Fed surveys, nothing there. Initial jobless claims and jobless claims. Last week we had a shocker. There was like 200,000 more claims than we thought there was going to be. So I don't know if there's going to be a reversal there or what, but with the stimulus plan and everything else kicking into effect within the next 30, 60 days, everything should be getting much, much better. So my outlook is basically looking out, not in the next couple days. Where are we going to be a week, 2, 3 weeks from now? And I think we're going to be in this range here, and everything's starting to click a little bit better. So what happened intraday? Was there any major moves throughout the day that we should have watched? Nope, because as the market kept going and as the inauguration kept continuing and as the day kept continuing, and there was no hiccups or blips in DC that a lot of people expected, everything just kept getting a little bit better, a little bit better, a little bit better. So we love that news. What are the average rates throughout the country right now? This is my chart here. So we go over the 30-year conforming loan, 30-year jumbo, FHA, and VA. Right now, nationally, here's some rates we're getting. Now, guys, I'm seeing some rate sheets come across that aren't locked. God bless you for getting what some of you are sending me. I hope they're accurate. I'm not insinuating anything, but I'm getting a lot of loan estimates with rates that they're nowhere on the board. Meaning, and I'll go back to my analogy, and I was quoted in Yahoo Finance and MSN News a couple months ago, when I said this comment. I said, it's like me driving down the street and saying, are you kidding me? Or I think the caption was, holy moly. Look, gas prices are 50 cents a gallon. If you see that sign, look down below. Because what's required to get that 50-cent gallon of gas, you had to get a car wash, 3 hot dogs, a pizza, a case of beer, and a bottle of Coke. It's cheaper just to pay the normal price. So, but I'm getting some quotes in of rates in like 2.25 on a 30-year fixed with no fees. Guys, I don't know who's quoting you that, and I hope if you can, when you close, send me a copy of your closed note. I hope you're not getting taken advantage of, because a lot of the ones I'm getting aren't locked, and they're giving you that quote with no fees. And 2.25 is literally like me telling you you're getting gas for 50 cents. If you're getting it, I don't know how you found it. Kudos, but my analogy on this, let me go back to, this is the national average. Okay, so let's say, for example, you can get a rate a little bit lower than this. You might be talking 2.7, 2.6, 2.5, not 2.2. There's no big enough spread there to be able to get you that rate. And if you're getting it, again, I'm be careful. Same thing throughout here. So if you see the trend, last year at this time, we were in the 4s almost across the board, except for the VA loans. And now we're down in the high 2s. It's about a 100 point or 1% reversal. 100, when I break down 100 basis points, 100 is 1%. So when you look at this number right here, a 1-day delta is a 1-day change. So the change from yesterday is down 1 basis point. The basis point is that 6 figure right there. So yesterday would have been 2.87. Today we're at 2.86. On a $100,000 loan, I'll guess it might be 10 cents, maybe. Don't quote me on that because I'm just guessing on the top of my head. It is virtually irrelevant, I guess is what I'll put it there. So rates are pretty stable. You can see it through here as well. They've been pretty stable since November. Okay, so that's where we are there. The great news, like I said, that came out today is Daca recipients are now eligible for an FHA loan to buy a home. That is exciting news. And so what I'm going to go over, that's my rates for today. And I'm not really posting my rates anymore, and I don't know if I'm going to go back to that. Leave your comments down below. The tough thing is when I post a rate, if you go back to some of my old rate sheets, on a 30-year fixed rate, there is not one rate, okay? There is a combination of, that rate could change based on your credit score, the type of loan, your loan amount, if you're getting cash out or just refinancing, the term of the loan, how much in fees you're going to pay. It's an astronomical amount of changes or adjustments that can go into that rate. That's why I show you what the average rates are out there. So again, when you look at that average rate that I just posted, if you're getting 2.25, be careful. Because it's like you shopping for a car. I'll throw this one out there. You're shopping for a car. All the cars are basically the same. You're getting a Camry over here or a Camry over there. This one's $22,000 and this one's $9,000. Why is that one $9,000? Everywhere else it's $20,000, $21,000, $22,000, and this one's $9,000. If it sounds too good to be true, think about it. Just be careful. Okay, so that is it for today. Tomorrow morning, the market update, I'm going to go through cryptocurrencies. I am getting bombarded in YouTube and emails on, Dan, what is cryptocurrencies? What's Bitchain or Bitcoin? What's this? What's that? And how can I buy, $100 worth or whatever? I'm going to show you what I do. I'm not a financial planner. I'm not a stock analyst. I'm not a stock broker. I'm just telling you what I personally do. This is for entertainment purposes, and it's my hobby. And it's truly what I'm doing behind the scenes in my personal life. However, if you like what you see and you're like, Dan, I need help with a mortgage. Again, if you're looking to buy, let's get you pre-approved, and I will follow this $15,000 first-time homebuyer product for you. We will, the minute the Biden administration launches it, we will have it. I promise you. If you're in an area where you need down payment assistance, we have down payment assistance all throughout the whole country. We have national programs and we have state and local programs. We can look those up for you. If you're in Illinois is the only one right now that I know. I just did a training class today that has a down payment assistance program that'll also include up to $40,000 of student loan debt relief. There's some caveats there that I won't go over thoroughly right now. I'll put a video out on that and get that out to all my clients to kind of break down that in detail. So that is that. But if you like what you see, all I ask you to do is please do me a huge favor. Give me a thumbs up. Help me get to 11,000 subscribers. If we can't by the end of the month, we're like 200 short. I'd greatly appreciate your help there. Hit the bell so every time I do post a video, you get an alert. Hope you watch them. If you don't, so be it. But if you would, please just take a couple minutes and look at that. I promise you, I try to make them as educational as I can. If you want to reach out to me and you're like, Dan, how do I get started with you to start watching my mortgage and helping me get pre-approved and so forth, go to therateupdate.com. Down below right here is our 800 number, 844-775-LOAN. It's 844-775-5626. Or email me at dfrio@preferredrate.com. What I ask people to email me is this. If you're in the mortgage process right now, send me a copy of the mortgage package that you got from your current lender. Within 3 days, they have to send you an estimate. It'll tell you the loan amount, the fees, the cost, the payments, the everything. Let me analyze it. Make sure there's no fine print. Like I said, that 50-cent gas thing in there. Many times I can't help. A good majority of the times I'm winning. I'm being able to get you a lower rate and lower fees. So again, if you're in the process right now, email me that packet. If you're not in the process, do me a favor, email me your mortgage statement. Let me do a mortgage analysis, give you maybe a 15, 20, 25, and a 30-year term breakdown, show you at each point how much you could save or how much quicker you can pay off your house, anything of that. At least try. You might be intrigued. My son just bought a home about 8 months ago. He's refinancing right now. He's going to save $150 a month. He's going to send in $100 extra each month. He's going to pay off his house that much quicker, and it's a win-win for him. So that's that. How do you get me, or how do you send me your mortgage statement or your paperwork? Again, dfrio@preferredrate.com. If you want to just go to the website and get started, you can apply now and do a complete application. If you want to, you're interested in buying a house, but you're like, I don't really know much about what, click the home purchase qualifier. It'll ask you a bunch of questions. Based on the answers, it helps me determine what program to put you into. That's for the purchase part of it. If you're looking to refinance, this one here. Down here is if you just want to call, and we'll give you a call and go through any questions you got. Right here is a home analysis website. It's awesome. It's free. Normally it's a paid service. I pick up this subscription for up to 3,000 subscribers. So be a part of that 3,000. Otherwise, it'll be locked out on you. It'll give you more information about your house than you even want. The last thing I ask you to do is I created a website a couple years ago, and it's now starting to take off. Can't figure out why. It's called Credit Scores and More, plural, creditscoresandmore.com. Step one is a free and simple process. You click in it, within 3 minutes, you're going to get your credit score. And it's a it's a completely an educational process for you. If it does ask you for any, to subscribe or upgrade to this, don't do any of that stuff. Just go in there, get your credit scores, set up the alert system. Don't subscribe to any services. It's completely free. So that's what I suggest. I use it myself. That is it for today. So God bless. Take care. I'll see you tomorrow with more exciting news. See you then. Bye-bye.